Hello traders, welcome back to another video. We're doing another trade recap today, and I want to go over something a little different in this video. I want to go over some swing trades that we've had, and I want to show you guys the way I pick swings in this current kind of a market we're in. This is the easiest market conditions to swing trade in, is uptrends in my opinion, because it's very easy to see setups. Volatility is low, and you can really have a huge success rate if you follow the way that I'm going to show you to do swings. Okay, excuse me. So the first one we're going to look at here is Snap. Snap is a company that really got beat down. It got beat down too far, in my opinion. Snap, it's still a very relevant company. I don't know. I don't know the financials of the company. I don't know really how well they're doing, but I know Snap is used by many people, and I know it's not a company that's just going to die and go to zero, right? And so that's one thing you want to look for with swings. Look for companies that have really just been beaten down too far. They've built solid bases, and maybe they've started an uptrend again. I'm going to show you another example where you can actually play at the very bottom, but in this case, it's come back, right? It's already come back, and it starts what I like to call a bullish pullback, which is where price action really is not getting rejected very hard, but rather it's sticking around. It tends to break back above some important pivot. For example, these two lines I have, right? It was very important back in this area, and Snap has now broken back, and it's holding, right? And it's moving sideways. So what we want to do is draw trend lines, right? If you haven't, I will put up my my trend line video on the screen here, and you can go check out how to properly draw them, so you can always know when something is breaking out. So if we zoom in here, we've got our trend lines from close to close, and it closes above, closes on it, and boom, there's the actual break. And so what you want to look for in a swing like this, on a bullish pullback, right? You want to look for that top trend line to be broken, and you want to wait for that daily close. And the next day, you want to try to get in around that trend line. You might want to enter a half position at first, and then maybe a half if it pulls back to the trend line. So what we did here is we took it on this day here, when it actually closed well above. I liked it. This kind of broke this day. And then the second day, I liked that bullish sentiment. It held, right? And so how I did my entry here was I simply just, I had two trend lines that were kind of converging, and I had a former pivot right here. And so I just entered my swing around that area. And whenever you enter a swing like this, the key is to make your stop loss. The breakup candle, whatever candle broke the trend line, so in this case, I would use this because this is a nice breakup candle. If Snap were to come and close daily below that candle, I would be out of my trade. What I love about these trades, guys, is it keeps you so close to your stop loss. It keeps you so close to risk because you're playing a breakout. And so I can have my risk at 15.5 and say I enter around 15.9, 15.8. All right, that's 30 cents away. It is a $15 stop, but that's not far considering the reward that a winner in this strategy will give you, right? And this, I think, reached 100% gain today on February contracts. So about a month and a half out, and we hit 100% gain in just a little over a week. So incredible stuff here. And when we're looking for targets, we always want to keep in mind sell-off areas, right? We want to keep in mind sell-off areas and candle closes, okay? So the first thing I saw for a target was this clear breakdown candle that was quite large. That's when you look from right to left. Always look from right to left. Don't worry about all this. Look from right to left. The first real area was this large breakdown candle high right here. And we can see there's another time over here, it came down and was rejected from that area. So I like this area as a target, right? About 17. And then on this chart, I'm looking for another target, and I see this breakdown candle, but I say, okay, there's also two pivots here. Where is the highest close that Snap was able to get to? And you can see it was right here, this close on this day, and it closed at about 17.91. Notice that was basically the high in today's trading session. So look for the highest closes you can find, any breakdown areas. Maybe there's a trend line resistance. Maybe there's ascending highs over here, and you can end up drawing a trend line, and boom, that can be a target as well. So yeah, this was a good trade. Stocks that have been beat down, recapture important levels, and have bullish pullbacks like this, perfect setups for swing trading. On to the next one. Let's look at ROP, Roper Technologies. I have no clue what this company is. I found it while just searching through a bunch of stocks. I think it's an industrial company. But again, you want to look for either something like Snap, or in this case, you want to look for a company that has always been a good company, has always been a stock that has gone up and will continue to go up. And then you want to look for a medium to long-term downtrend on that stock. If you go to, say, a weekly chart, you can see this is an incredible company. They nonstop are going up, and they've had a very long period where they are pulling back, another bullish pullback scenario. And so in this, again, you want to draw your trend line, and that trend line is the key breaking point that you want to wait for. And the more decisive the break is, the better. So when we have this break on ROP, that's very decisive. It closes at the highs. It's on higher than the recent amount of volume, pretty decent volume. And that's exactly what you want to see on a trend break. So this is yet another great way to pick out swings in a bull market, or even not a bull market, right? There's still uptrending stocks even when the market is not doing as well. Look for these pullbacks on great companies that are just going through a period of consolidation. So boom, another breakout, and you always want to try to enter back at that trend line. Stop loss is at the bottom of the breakout candle, so a daily close below 353.78, and you'd be out of the position for a loss. As we can see, this one happened rather quickly. Took about 4 days from the low here to skyrocket to a price of 370. I don't think this thing's even done yet. I'm looking for this to reach, of course, the breakdown candle high. Always keep in mind pivots, breakdown candles. That's really the first target that I even have on this thing. As we can see, the company is very good. It tends to go up, right? And when you have a setup like this, it's likely going to at least reach the highs, which is a beautiful thing, right? You have the inverse head and shoulders pattern that will typically lead to that top area. And I mean, if I'm being honest, this thing will probably end up making new highs. This is a very powerful breakout because it's been in such a long consolidation period. So yeah, this is another great breakout. Good companies is the first key. Good company, just take a look at the chart. Does it always go up? Then it's a good company. And second key is looking for that intermediate to long-term pullback or downtrend that it's having, and wait for that trend line break. Okay. Next, I'm going to look at two more here because I want to give you a few different examples, a few different setups, maybe even three more. I want to give you guys the best setups that I see. Okay, the best setups that I see. Charter. This is one, and this is also a very powerful way to choose your swings, is from an earnings gap up where the stock stays up after its earnings and it stays sideways or just pulls back slightly. That's another very, very powerful way to choose your swings when you get a break finally. So in this one, we had a trend line. We had a trend line break, close above, We had a break up candle here. This was nice. It started to make higher highs, right? It was in a little downtrend right here, and we see a higher high and a close up here. We then start seeing consolidation within that bar. So there's two places you can enter. You can enter on the trend break, or for even more confirmation, you see this inside bar start forming. Wait for this daily close above right here, and then enter on a pullback back to the inside bar, the top of it. So right here, you can see, boom, pulls back, buyers show up, and boom, it skyrockets to new highs, right? Skyrockets to new highs because of the good earnings, because of the technicals. And yeah, this was another great play, you know, and this one, it's harder to necessarily pick out targets. Again, I always say maybe try to draw a trend line, maybe pick big round numbers like 500 as a target and take something off there. Look for every, you know, on a stock that's $500, maybe 500, 510, 520. It's hard to always get the whole move. You're not always going to get the whole move. It's just not possible. You have to take something off at some point to lock it in. That's the one problem that I do have with breakouts like this and playing a swing like this. So it's a little bit harder to know when to take profits. But yeah, another incredible play. I mean, I guess if you drew a trend line somewhere around here, look at that, we're about at it. So there's ways to find targets even at all-time highs. So again, with these kind of setups, look for an earnings move that gaps up, and then a stock that continues to stay sideways, either in an inside bar pattern or a slight downtrend, and then wait for that break, okay? I want to go over M because this is an interesting type of play that a lot of times cheap stocks will make these moves, and they can lead to absolutely massive moves sometimes. So they aren't always the best companies, but even most companies are not going to go straight to zero. There will be buyers at some point for whatever reason. Now, this is what I like to call a revival pattern. It's when a stock comes down and you can see multiple times it starts to bounce away and try to make higher highs as it forms a very solid base. Macy's in this case was around 14. It started to build this very solid base. And it usually will have trend lines like this. It forms a sort of wedge. And a lot of people think that it's going to keep leading down. But as you can see, the rounded bottoms, they're indication of a very solid base forming, and likely a breakout up is coming. Another thing you want to pay attention to on these is the massive increase in volume, right? This is institutional participation. This is not retail buying a penny stock. This is huge amounts of money flooding into this stock, knowing that it's going to go on a huge breakup, okay? This doesn't happen by mistake. That's one very key thing you need to see in these stocks that are having this kind of a breakout and forming this base. You have to see a massive increase in volume, or it likely is not going to work out. So again, draw your trend lines. There's usually gaps involved. This one was because of earnings here. And so what a price like to do? It likes to go fill gaps, right? It doesn't like to leave gaps alone. It's attracted to gaps eventually. And so we're thinking, okay, we have this nice trend line. We have a nice base built. This trend line isn't right, but you get the point. It's probably going to try and go fill this gap up here. And so again, we wait for a daily close above the trend line break. And then what do? We enter on the retrace to the trend line. Stop loss is daily close below this breakup candle. The low is at 16.16. That's your stop loss. And again, just look for breakdown areas, look for gaps. So here was an unfilled gap here. That was my first target. I'm continuing to hold, hoping that this gap will fill. If it comes back down, I exit the rest at break even, no problem. Trade's done. I locked in the profit. On to the next one. So yeah, this is what I like to call the revival pattern. It doesn't happen often, but it happens in some stocks, and it's a really high success as long as you note the volume. It's a really high success trade. Really like it. Lastly, real fast, we're going to go over Triple M. Triple M is also an uptrending company that's gone through a pretty serious pullback. I'm not sure if there was news in here, haven't really paid attention to the stock much, but I've started to recently because we had some solid areas of resistance over here, and we're starting to build a nice U-shaped base around this area, potential inverse head and shoulders that will reverse up to these highs. Now, what made me actually take this swing trade was first the trend break, always trend break. This is also a bit of a revival pattern in and of itself. Look at the massive volume, down move, gap from earnings. We get the same wedging pattern. We get the same higher lows, starts trying to make higher highs, massive uptick in volume, very similar to M. And so we got the break, and I wanted a lower entry, but what I saw here was what's called a high base pattern, where something moves up and it just goes sideways and it cannot break back down. And so what I did was I just entered at the bottom of this low base pattern. I think it was on this day here, and I saw this day it could have easily gone down, could have went and tested the trend line. Again, it came up and finished in this high base pattern, and so I decided to just enter at the bottom there. And this one is just getting started, but this is another powerful pattern. Is a high base. Look for stocks that have had up moves and that just start going sideways in a tight range, and then try to enter at the bottom of that range. As always, the stop loss is the low of the breakup candle right here. Daily close below. Look for targets. Our target's not quite hit yet. First target is right here, and you know, this works out really well. Maybe it'll skyrocket real quick up to this gap or this bottom of this gap here. Who knows? Market's bullish. Anything can happen. Yeah. So I hope this helps you guys with swings in a bull market. Some really useful patterns. I'll throw in a free one for you if you watch it tonight. Check out Rock. We have the gap up from earnings. We cannot go fill the gap. On top of that, we have a long-term trend line break. Incredibly long-term. We have a good company. And at the top of this, we have an inside bar. This bar breaks up. Every single bar afterwards has closed inside that bar. Look what happened today. Look what happened today. So tomorrow, Friday, January 10th, hopefully you're watching this on the 9th. Look to enter when it retraces back down at the top of this inside bar. I'm telling you, these have an incredibly high success rate if you find the right setups. So I hope this helped you guys kind of realize what some good swing setups are, what to be looking for, what kind of companies to be looking for. And yeah, that's going to be it. Please like it, subscribe, and I'll see you guys in the next one, all right? See you.